Alright, what's up everyone? Welcome to another video. And we're going to give a quick market update because the market's looking bullish. You can see all these tickers on the left side of the screen here. I call these my macro tickers. These things follow the broader market environment. Like we have corporate credit, we have treasury bonds, we've got the major indices, we've got gold, silver, oil down here at the bottom. And everything's basically looking bullish here. See SPY having a super green day here, and it's looking like this for a lot of equities today. Super bullish. When we flip over to the VIX index, you can see that's still just printing red candles. That's good for equities. And even when you pull up the actual futures chart, it's very similar, just keeps falling. That's good for equities. And when we pull up the dollar index, we have a very interesting development here. See these support zones that I've highlighted here. I've been talking about these in a lot of my videos when I'm talking about the dollar, and I've mentioned how in the past the dollar just bounced off of this support zone several times. This is basically the rallying support. It's been holding up this dollar in this the steeper, sharper part of this rally, right? And when you look over here, you could see this red candle. The price is dipping below support. It has not done that in basically all year, practically. So it's looking quite bearish for the dollar at the moment. This is good for equities right now in the current market environment, macro environment. But the day's not over, and we could very well get a bounce off of this support. That's what we should expect. And if you believe the Fed's going to keep hiking rates, keep interest rates high, then the dollar should stay at these high levels, you would imagine. So the day's not over. There might be a bounce here. I wouldn't go all in bullish or all in bearish on the dollar, or all in bullish on equities, what have you. We'll see how this plays out, but if the dollar continues to fall below support and just keeps dropping, dripping down lower and lower, then that will look good for equities. And I believe whether or not, if the dollar does get below this support, whether it stays down there will depend on the inflationary data coming out Thursday. We got a lot of data coming out. A lot of the Fed officials will be speaking as well. And these economic data releases have affected equities, the dollar, yields, all that stuff, right? So keep eyes on Thursday for sure. And when we flip over to the corporate credit picture, I mean, it's looking pretty good. It looks like we're consolidating at these lows. We got looks like a higher low here. We really want to see some sustained upward movement here to get bullish. And this is ticker LQD, guys. So this is liquid companies here. So when you see investors bullish on corporate credit, then usually equities follow as well. That's why I follow these corporate credit tickers. And I mean, it's not super bullish yet. It looks like we're just consolidating down here, but at least we're not having this really sharp drop. We got out of that downtrend, so it's looking better than it has over the past, several weeks, months, what have you. Here's ticker HYG. These are less liquid companies, so their credit is usually not attractive. The picture somewhat looks the same. It's doing a little better. Got some consolidation down here. We have that higher low. Still need to see some sustained upward movement here, but it's looking better than it has in this sharp downtrend over the past several weeks. So corporate credit, the picture there is getting a little better. And here's gold. I want to go over quickly because this thing's breaking out of a downtrend. I'm highlighting the downward trending resistance that's been holding this thing down for several months. The dollar's been skyrocketing, and that's been bringing down gold. But things are looking good, man. We broke above that. This is a big green candle, you can see. That's short-term bullish, definitely. And I already showed you the dollar dropping, and you can see gold gapping up while the dollar's dropping here. So it might be a good time to get in on a little short-term trade in gold. I'll have to look into it a little more, but it's looking pretty good at this moment. And this is ticker GLD. It will look very similar to gold futures. Now here's silver. This ticker SLV. This one looks similar to gold. They somewhat travel the same direction, but they say that silver kind of has a mind of its own because it is used more in products, like goods, like electronics and whatnot. So that gives it a little different kind of price swings than gold. But when precious metals are ripping, then silver definitely joins the party, and it actually does exceptionally well. Sometimes it rips much better than gold if you're talking about percentage gains and whatnot. when we jump over to the S&P sector indexes, everything's looking pretty good. Everything's traveling in those upward price channels or wedges like I did mention in a previous video. Even communication services is getting a bounce for the past 3 days. Like I mentioned, it should, because it was at that trending support, right? Here's the rest of the sectors. Ignore this Dow Jones indice here, or Dow Jones index, I should say. But these look just like the other 6 you saw. They're all traveling in these upward channels, got a solid support. Everything's on that uptick, on the bounce, I should say, of these short-term channels here. Consumer discretionary still doesn't look good, but hey, it's near some support zone, right? Could get a bounce there soon. That would definitely help out the broader market, the SPY. So the sector picture is looking good. And then when we bring up SPY again, you can see the S&P 500 wants to go back above this downward trending resistance. We did that previously, but Jay Powell brought us down with the market didn't like what he was saying apparently. But we're back above it. I guess this bear market rally is not over when we broke below this support line that I'm highlighting here. I thought that bear market rally was over. I got a short position. And when I saw VIX kept falling, I covered that short position because I thought VIX was going to bounce off Powell's comments. It did for one day, and then it came right back down. That's bullish for equities, so I covered that. I'm still soaking up some of the premium on that to get my money back, but I'm long now, so as long as we stay above this trending support, I believe in this bear market rally. And I mean the price needs to stay above this purple line, and that's what it did today, so flipping bullish. Personally, I'm into some healthcare calls. I was holding AbbVie until they did a downgrade today. It seems to be wiping away some of those gains, so I dipped out. Might jump back in on the dip. I still like it. But generally speaking, everything looks bullish. All those macro indicators I follow, corporate credit could look a little better. We want to watch for that CPI data, all the inflationary data coming out on Thursday. The Fed officials are going to be talking on that same day, so that'll be interesting to watch. I'm sure the market will make some moves off the data that's been happening. The market's really sensitive to these economic data releases. But other than that, I mean, we could hold bullish on this bear market rally. We're above these previous highs. We made higher lows here. And things are looking good. I'm short-term bullish. I know we are in a bear market. Powell said he's not going to stop interest rate hikes yet. He said he will eventually. He doesn't know yet. We'll see how this inflationary data comes out. And that's about it, guys. So if you liked anything you heard, man, hit the like button, subscribe, leave comments, all that good stuff. I would appreciate it, and I'll see y'all on the next video.